second quarter earnings are right around the corner. They'll be starting next week. What is going on with them? That's what we're going to talk about. You can see here what's going on with them. Europe, obviously, James Hagerty in Pittsburgh with the story. Top of B1 there, marketplace. James, tell us about the Europe effect on S&P 500 earnings.
Well, there's a lot of attention going to be paid to just how bad it will be on earnings. So far, earnings forecasts for the S&P 500 have come down only slightly over the past few months, despite all the troubles out of Europe. There is concern that once companies come out with results and update their guidance, that some of those forecasts will have to come down further.
Right, yeah, you say that the forecasts, I think they were down less than 1% from a couple of months ago. Do you think that that's a big enough cut?
Well, they're down about 3% overall. It's hard to say. Last year, we had a weak patch in the economy about this time of the year, and then things came out all right in the second half. I think we'll learn a lot over the next few weeks as companies come out and say how these economic trends are really affecting them on the bottom line.
Yeah. Let's talk about the auto sector for a second. You mentioned this in the article. We just got the ISM manufacturing survey, which was weak. How are the auto companies faring right now? What should we expect from them?
Well, they've already warned that they're going to have pretty bad results for the second quarter, and their forecasts have come way down. They're down more than 25% from where they were at the beginning of the quarter in terms of forecasts. They're both Ford and GM are still expected to show a profit, but sharply below a year ago. And both companies are quite dependent on Europe. So that's where they're really going to be hurt in terms of weak demand there and in terms of currency translation with a weaker euro.
Right. James, you talk to a lot of people to get this story done, analysts, people at these companies. What's your general sense of how people are looking at second quarter earnings and the second half of the year?
Well, very nervously. I think they're hoping and praying that China will start coming back and take up the slack that is needed from Europe and for a still pretty sluggish U.S. economy. They know that companies have already cut costs about as far as they can go, and so we need a burst of demand somewhere in the world.
Right. And I want to talk about Caterpillar for a second, because Caterpillar kind of, there's a chart with the story, I believe, that we're going to pull up here in a second. It really kind of crystallizes how the rest of the world is affecting U.S. companies. You can see where, North American sales or machine orders are down a little bit, but the global orders are down sharply, right?
Well, overall, globally, Caterpillar is still reporting a rise in retail sales of its machinery, but the rate of growth has come down sharply so far this year.
Right. And yeah, we're pulling the chart up now. You can't see it, James, but we have it up from your story. You can see from the rest of the world, I mean, it is a sharp drop in, like you say, the rate of orders. What is Caterpillar saying about, because Caterpillar is very important to the Dow. It's very much a bellwether. What are they saying at Caterpillar right now?
Well, they're not really saying anything now. Forecasts for Caterpillar have not really come down. Mm-hmm. So the market has been fairly confident that Caterpillar will be okay. They've got a very broad spread of business around the world. Mining has still been doing pretty well, and they sell a lot of mining equipment. There will be a lot of anxiety over exactly what they do say later this month.